Markets are closing out the week on a positive day after a big up and down day today. Markets started out up. We're down as much as 600 points on the Dow and then back up again into the close. So let's jump in, take a look at what's going on here and see if we can finish this week out strong. Only a couple of minutes to the close. Dow up 1%, S&P up 1.2, NASDAQ up 1%. And the Dow was up as much as 300 points, I think, total for the day, but down as much as 600 points. It was a 600-point gain earlier in the day, and just kind of whipsaw action. Of course, positive jump on the jobs report because the jobs, report looked good, and then adding to the non-farm payrolls, and then the market realized, wait a minute, the better the jobs market looks, the more bullet and ammunition the Fed has to continue strengthening, continue tightening, continue their restrictive policy. So interesting day in the markets today. And a lot of that's algorithmic trading, right? So any good news is in the formula. So markets will buy on those signals. And then once the traders get in and start realizing what's going on, then they'll do a little bit of selling. But the interesting thing, and what I think is going on here, is that our next big mover of markets is CPI, which is due out on Monday, November 14th. So we have a solid week of trading ahead of that. And we know that CPI is going to come in either on par or maybe a little bit hotter. So markets might continue up, break this high again, potentially ahead of CPI. And if it's a bad number, then obviously markets will sell off. If it's a good number, then markets will continue up. But if you look at this price action on the Dow here, we're not quite looking like a bottoming structure at this point. I think markets are going to need to come back down, retest these October lows like we did these June lows, see if we can get support there, and then possibly could start talking about putting in a bottoming structure there, depending on what's going on. And again, anything can rattle markets, right? So an escalation in Ukraine, China invading Taiwan, North Korea to South Korea. There's just all kinds of things going on now that could disrupt markets, and you just got to keep your eye on those things, and you know how to play them if and when they do happen. Let's take a look at the moving averages here. The Dow Jones resistance on the 200-day moving average, NASDAQ resisting on the 50-day, S&P resisted on the 100. So that's interesting that the NASDAQ got rejected around that 200-day moving average. That would be a good place to get above to look for continuation. As you see, the other markets are still well below. Let's take a look at Bitcoin here and see what's going on with Bitcoin. Trying to keep this base going, reaching for these range highs here at that 22,000 range. And of course, everything's in play up to 25,000. Could very well likely see another reach attempt at 25,000, which is about where this 200-day moving average is coming in. If Bitcoin can get up there, break that and find support, that's a good sign. Or it could just pop back up like we saw back in March and reject. And if Bitcoin gets rejected off of that 200-day, if it reaches it, that's not going to be good. And that can happen, anywhere along this point if you extrapolate these things out. And let's take a look at what that looks like if this just kind of continues like it's doing like that, and then price kind of continues up as it works its way around. It could be in this range where it could get up and then try to find support to kind of continue on, or lose it and then go off. So if this gets tested and lost, then that is a big warning sign for the markets. If it gets tested and holds it as support, then that could be a very good sign that this base is being put in for Bitcoin for this bear cycle. And there is a lot of confluence, a lot of technical analysis that would show that this could be a good bottom. If you look back in this area here, it's somewhat is similar to that bottoming structure right there, but it's also very similar to this structure here before a final, blow to the downside. So there's good confluence either way. The biggest thing to look for this as being a bottom is that inflation has not peaked yet. It has not started reversing, and the Fed has not been able to slow down. And as we know, in this macroeconomic environment, that's kind of what we need, although very different investor at scale at this point, kind of dipping their toe in, maybe kind of testing some things, waiting to see some stability before they jump in. So a lot of the retail is gone. This is a lot of long-term holders here. A lot of institutions maybe buying a little bit, but they're not in at scale yet. They're just getting ready, getting set up, waiting for the right opportunity. Ethereum kind of plugging along the same way. All the major altcoins kind of doing the same thing. Matic had a nice little pop today. Polkadot hanging in there. I think let's take a look at the other, Ape's kind of holding on. Dogecoin, where's Dogecoin? Dogecoin still kind of hanging on to this little level here, critical level for Dogecoin to kind of hang on to see if it can get continuation, but most likely it's going to drop back down and get back down to these lows again. There's no real catalyst to drive it other than the Twitter speculation and a lot of resistance against that whole movement. So these are the things that I'm looking at in the markets. And nice green day today. Potentially, this could lead to more upside going into next week ahead of CPI. And then markets will pause, wait to see what happens. Good print, continuation to the upside. Bad print, markets will sell off, retest those October lows most likely. And then we can start talking about putting in a base depending on what that inflation print looks like, because that will give us guidance on what the Fed's going to do. There's already a couple of Fed members out earlier today that said that they see the slowing pace of rate hikes as early as the end of this year, maybe early next year. But again, that is slowing the pace of the hikes, not reversing course and keeping it there until inflation is under control. So very interesting, different time right now, unprecedented. So just all you can do is just watch the macro environment, watch, the geopolitical environment, and just kind of manage that risk until we get the all clear from the Fed that markets will be back off to the races. So these are the things I'm looking at. I'll see you on the next video.